Good afternoon, dear colleagues. As always, Dan Rifleman. As always, we're going to Sunday. We're going to look at the likely movement of trading instruments for the coming trading week. As always, Euro Gold, SP 500 Index, and the Dow Index. Jones Index. Colleagues, I've never reminded you about likes and comments, but today I thought I'd ask you, and so I'm going to ask you to please, the video, please like or dislike it. Maybe comment on something absolutely no matter what. If it's good, I'll be very happy. If it's bad, I will not in any way, I will be sad. For the simple reason that constructive criticism allows us to become better. And a little announcement, dear colleagues, communicating with our colleagues from the community, I have once again made sure that very, very few people understand what is competent capital management. And even more so, very few have a clear plan and a clear understanding of trading techniques, trading strategies in and out of the market. Very few understand what are patterns, what to do with them, and how to deal with them. So dear colleagues, please come to the community, write to me in private promo code YouTube, and I will make for you a personalized offer. And actually, if you need a consultation absolutely free of charge, I'll tell you on Zoom on tape about patterns that I use, and I'll explain the logic of competent logic of capital management capital and show you the logic of entering the market on pin bar patterns, whereas on the internet, it's written that they never work. I'll show you the logic that works for 70% on pin bars. And also I'll show you the logic behind price takeovers, or as they like to call them by the word, market structures. Well, dear colleagues, here I have invited you and asked you to put dislikes, who likes or like it or not like it. And so let's get started today. The euro dollar is already on the colleagues. In fact, despite what we have, according to the reports, the Commodity Futures Trading Commission, a decrease of buyers by 8%. That Coley, we have a decrease in buyers. We have an upward torrent, and a decrease of buyers indicates a probable corrective market movement at the moment, and the accumulation level of 114 million or 1,378 million call option contracts, as well as the presence at this level, the strongest resistance range, which is the maximum open interest in call option contracts, and the levels, premium levels of these contracts, at which most likely to open futures, put contracts, options have been recorded by these futures on the selling professionals. Therefore, at this moment, I recommend to consider buying on this trading instrument. However, if the trading instrument permanently continues to fall further without any impulses to break the structure or the appearance of pin bars with liquidity working off, then of course no market entry should be made if the instrument will fall and fall and fall, fall and fall and fall. And why can it fall? For the simple reason that for the current week, we have a request for option put contracts for $1,191 million. And with a decrease of buyers by 8%, I can conclude that this trading instrument in its corrective has not stopped yet. It doesn't make a lot of sense because I don't see much point in selling, where you and I will put a stop loss right here. So we're selling here. This is how many points we're selling. Pips 140, 150 pips in the stop loss. We have a potential 250 pips. There's no point at all, first of all. Secondly, the strongest support range of the monthly auction contracts. And I've highlighted it's the sweat option hasher with their premiums, with their premium levels. And we know with you how this range affects the price. Even if the price breaks through it, but let's say, example here, then very often the hajira of their hajira the price back, because at the premium levels, in this case, most likely to open futures buy contracts with maximum. And if the contracts are staked, then at the premium level, open with maximum contracts with maximum volumes futures contracts for sale. So at the moment, we are buying euros. We buy only on patterns, and do not forget about competent management, capital management. Again, if there's something is not clear, again, please write to me, please. YouTube promo code. I'll talk to you. I will communicate with you up to the point that absolutely I will give you a free consultation for about 30 minutes quickly enough and succinctly explain what the whole point is. Gold, most likely everyone's been waiting for gold, and unfortunately, maybe for joy, gold is reported by the Commodity Futures Trading Commission. Commodity Futures Trading Commission reports for the second week an 11% increase in buyers, which means we're trending upward and more buyers. More buyers. Why do I say unfortunately? The thing is, I really want to see a wave of corrective prices. I mean, we have wave A, corrective wave B, corrective wave B, and I was hoping that we would have a 1, 2, 3 wave C corrective wave, after which we can consider buying. I was hoping that this corrective wave, in principle, according to Fibonacci, will reach the level of 50%, because the level of 38.2% Fibonacci level from this growth we've already worked out. And I was hoping that we will reach the 50% level exactly. We'll come to the level of 50%, and we will already be to buy a good plan in principle. Even I like it very much. But we have what we have at the moment. At the moment, we have an increase in buyers. And at the moment, dear colleagues, the thing is that, and hear very carefully, that the thing is that here I can, in principle, I can easily take the owl and pull it over on a globe. Again, I remind you, for animal lovers and globe lovers, that I also love owls and globes, of course. Of course, I'm not pulling any on the sauna on any globe. But since I can here in principle, I can easily represent an impulse, and no matter what kind of impulse it will be, a wave impulse A or wave 1 doesn't make any difference at the moment. No difference here. Down here, I should be able to see a corrective movement. And at this moment, it's basically a 1, 2, 3. Fine. But if we had momentum corrective movement, what then? I would like to see, for example, in wave C, dear friends, of course, impulse in this monster. Why? Now it all started on the impulse, just doesn't look like an impulse at the moment. Absolutely not. So I'm guessing that we'll see 1, 2, 3, a bunch of Bs, and then 1, 2, 3 with wave B, and from here, from about 38.2 out of the range, the strongest range of support in the form option fats. Here with their premiums, we will consider buying at the opening. We should only consider buying at the opening of the market. If you see something that I don't see, but dear colleagues, at the moment, I can't find the impulse here. No matter what I have with me, no matter what globe is not right. No matter how hard I try, I can't find the impulse. I can't find it. So pardon me, please. Now let's see how it could be. And it could be this way. I apologize. I'm sorry. I'm the one who took the grid. I meant to take the Fibonacci expansion. I'm very much love, dear colleagues, the Fibonacci extension and the Fibonacci retracement. And I also love it when they practically coincide with each other, as in this case. And that's exactly what it is right now. Just a second. Let's take out the big correction and take this one. This growth from it. We'll stretch the Fibonacci and depict it like this. This way approximately. Colleagues, I really like the level of 78 and 6% on the Fibonacci grid if it coincides with either the 100% extension Fibonacci, or better yet, 161 and 8% Fibonacci retracement. At this point, I've depicted the likely movement of the trading instrument. where level 78.6 on the Fibonacci grid coincides with the level of 100%. Fibonacci retracement, but in order to do that, you see we need to get a small wave B correction prolonged a little bit, and then get a wave C from which it will be possible to buy. So dear colleagues, in the forecast, of course, I will write purchases, but very clearly I will make it clear that buying only after the corrective price movement. This is the construction I'm going to draw in the forecast tomorrow morning. I will not draw in the forecast tomorrow morning. I will just write that to the level of hedgers. To the hedgers level, we correct. And already then, when there is a pattern for we are looking for buying with you, no other way. Otherwise, it's very important. S&P 500 index, dear colleagues. Well, actually, last time I talked about the fact that I like to keep selling. Why? Because we've had movement. No one can deny it, right? Let it be even a wave. And then we have a three-wave structure, 1, 2, 3. All right, wave B. Why? Why not? And here we were talking to you on Sunday. Sunday, I was saying that we're missing something. We're missing a target wave. So we're on wave C and quite the shop at the moment. At this point, I'm seeing a 1, 2, 2, 3, 4, 5, 5, 5 wave structure of wave 1. Most likely we'll get wave 2, then wave 3, wave 4, wave 5. Therefore, at the moment, dear colleagues, at wave 2, correction into the range of 50%, 61.8. We are considering more risky sales. And those who do not want to take risks in principle can consider selling with pending sell orders with a sell stop from the low of wave number 1 or from the range of 50%, 60, 18%, Fibonacci range, or as I like very much, again, I will stretch on the given wave and the Fibonacci grid, find the level of 78.6, and then I'll see how we're going to have here. If the correction develops, if the correction will show me the inner waves of the younger ABC, for example, I need to see what's going upward movement. I'll pull up 3 points, 1, 2, 3 Fibonacci expansions and see what's going on around level 78. I beg your pardon, 78 and 6 Fibonacci. Fibonacci retracements, what level of extension? The Fibonacci retracement is 100% there, or 161 and 8, and I'm going to work from that level. From this level like this for the next week, it is recommended to consider selling, and dear colleagues, Dow Jones index. I have read all our roughly speaking, not all of many of our colleagues and almost all of them. Some of them say that the Dow Jones index is better left untouched. Pretty much the practical majority, the majority says that the index should be bought. And dear colleagues, I'm against it. I really want to sell the index, to sell, and again, for the reason that we will have 31,000 level will be worked out, a huge, huge probability, for the simple reason that for the last 3 years, there has not been a single major in this index in the last 3 years of option contracts, either call or puts, that haven't been worked out by the price. And a 24% increase in sellers tells me that's why this instrument I will consider selling, as always, only when occurrence of patterns. And yes, dear colleagues, a small nuance on gold, I will remove unnecessary levels so as not to distract you. The point is that on gold, we are experiencing divergence, namely for 2 weeks in a row, we've had an increase in buyers according to reports from the Commodity Futures Trading Commission. U.S. Commodity Futures Trading Commission reports that this week you and I have gotten a specific decline in this trading instrument. You know that I love double divergences. I love it when 2 weeks in a row, for example, a trading instrument goes down and on the reports, we see an increase in buyers. That tells me that sellers are being lured into the market. Sellers are being lured into the market to give them a big kick in their ears. And that's what the Commodity Futures Trading Commission of the Commodity Futures Trading Commission shows us, that there's activity of professional participants in the Chicago Mercantile Exchange if the price goes down and the professionals buy. There's always the question of whether they're idiot professionals or you and me. Something I don't know. It always seems to me, and it seems to me very much that I'm right, that there is something we don't know, and that professionals who work with tens, hundreds of millions of dollars, and also billions of dollars, they're not idiots. I don't think a bunch of professionals got together at a table one day and decided, let's have a little bit of fun and lose a bunch of investor money. Everybody laugh it up and go to the market, and when the trading and instrument goes down, we go out and buy it. Something doesn't seem right to me. So at the moment, we're still seeing a single divergence, let's say a single divergence for 1 week and an increase buyers, but the fall is permanent. The drop in volume is also something to talk about. And when you and I are having a permanent drop in volume, or when the market just moves slowly, but in one direction, so there's no volumes to push it, and there are no professionals who want to turn this market. Nobody is interested in turning it around at the moment, and this market is moving quite slowly. Here we see immediate movement. Here we see almost impulsive movement of the market, and the volumes falling every day. This suggests it's more likely that this is exactly a corrective move. If we see a continuation of this corrective and it gets to the strongest support ranges, that would be a great time to get into the market to buy. But what is it, dear colleagues? Thank you very much to everyone who listened to the end. I hope that after I turned on the Dow Jones index, you didn't turn off the video and still watched it. I just forgot about gold. To say after the euro, I'm going to offer again. I invite you. I apologize to the community. I suggest you write to me in person. YouTube promo code, I'll chat with you. You will receive from me a personalized offer to join the community, ForexTimes, and I'll tell you what we do, although I think you know exactly what we do, but I also very sincerely advise you to learn how to manage your money properly, or at least understand the math, the elementary math of money management. At least answer yourself the question, can it be possible that in a week earned 200 pips, but earned, for example, plus 3% of the balance on the account, i.e. result, I have minus 200 pips, but plus 3% of the balance about the money I earned, considering that I have minus 200 points. Now I think that many of you will say, of course it can happen. And then you think about how that could be. I think you're going to say, how can it be? Can be. And then think about why that's a fundamentally sound approach to money management. You shouldn't be trading pips. You shouldn't be trading money. You should be trading exclusively percent of your account balance. Fundamentally sound approach. All other approaches will result in a loss of capital. And of course, trading plan. Dear colleagues and trading technique of entering the market and into the market, you must have confidence. You must understand exactly what you are doing, jumping from one strategy, 2, 3, 5, 10, 15, 20, and so on. Not even Raven Buffett. Remember how many years he's been saying the same thing for 40 or 50 years. He's been saying the same thing. Take one thing and do it. Every single day, and everything about the financial markets, you'll develop not only confidence and a technically sound plan and technique, and you'll also develop intuition. That means a lot, believe me. Take my word for it. Thank you, dear friends. Have a great evening, everybody. Bye-bye. Bye-bye.